Thank you for listening to another episode of Ask the OG. Just want you to know that my wife calls me the OG as the old guy, but we all know what OG stands for. Part of my experience in being in markets for 35 years is recognizing that there is one signal that is the most important signal of all, and it's one that anybody who's involved in the markets, crypto, stocks, bonds, precious metals, real estate, needs to pay attention to, and that is interest rates. I've spoken about this many, many times, and it is the one signal to understand what is going to impact global markets. Interest rates are blowing up everywhere in the world. They're steadily rising. I don't know if this will continue. There's one simple law. It's called supply and demand. Anybody who's ever taken an economics course or you want to be a PhD in economics, it's the only principle you need to understand. The amount of supply and the amount of demand. Rising interest rates in some contexts can mean that the economy is doing great, that there's all this demand for money everywhere. People are building businesses and buildings and factories, and there's a huge demand for money. So when the economy is really growing, interest rates rise. But then there's another factor that forces interest rates to rise, which is the refinancing of existing debt. And that's what's going on in the global landscape, is that every country in the world has a horrible debt problem. The United States is really bad, but the worst of all is Japan. Japan has a 280% debt to GDP ratio. For decades, Japan had zero interest rates. And what built and what fueled the markets was something called the carry trade. What is the carry trade? The carry trade is when professional traders borrow yen at 0% interest rates. So the cost of money is zero. And then they put it into other securities, treasury bonds, the stock market, to get a yield. So they're paying 0% for inventory, and that inventory, which is cash, is yielding a return. That has fueled the stock market for decades. Guess what? Japan's interest rates are now at decades highs. They're reaching over 3.5%, and it has been a very steep rise. It's going to impact the carry trade. That means people who borrowed yen at 0% can't do it anymore. It can't happen. It means liquidity is coming out of the market. It's called the reverse carry trade, where people who borrowed billions and billions of yen now have to repay it back. That is taking money out of the markets. Combined with, the United States has to refinance $9 trillion of treasuries this year. That's another huge supply problem, and which is forcing interest rates to go up as well. So, interest rates, pay attention to it. They're going up. It's not good for risk markets, even though who knows what happens in the short term. In the long term, rising interest rates are going to take liquidity out of markets, and that means stocks and Bitcoin. So pay attention to interest rates, pay attention to what's going on in Japan. Thank you.